Hey, Bulls and Bears, happy Easter to everyone. We're back with another dose of economic reality, bold of the bus, BX4 News. Let's go ahead and get into it. We have just witnessed a uptick here in some new developments, an uptick in the tariff-induced layoffs, and pretty significant uptick. We're going to talk about that in this report. Of course, the cost of living, the stock market, how everything going on right now with the fear of inflation and consumer confidence dropping to the lowest since 2020, since the health crisis, how all that's playing into the economy with consumer spending and with the expectation of rising prices. We're going to get into all that, folks, and more. Please make sure you're subscribed. Let's go ahead and start right here. And this one's out of CNBC. Here's the consensus amongst mainstream economists and the like. The tariffs will soon bring irreversible damage to many American businesses. We also see businesses basically bracing for impact with the higher prices. Some businesses actually already raising their prices. We talked about that just in our previous video about how some businesses are already putting on tariff add-ons to their costs and to the items they're selling and their services. Now, when it comes to the tariffs on China, the administration just came out recently and said they're going to exempt many electronic items, including iPhones, PCs, and chips that are used in components for electronic items here. So we're kind of seeing this picking and choosing of where the tariffs are at and where they're being exempted. So it makes it a very difficult investing environment when you have this on and off, picking and choosing, this and not that type of environment. So I choose to be very cautious and still invested very low levels right now in these markets because of the volatility, the uncertainty, and the risk. But we're also seeing a lot of cancellations of imports of China goods. So that in itself can bring on more inflation. Even without the actual tariffs, now you're looking at possible shortages and tie that in with the tariff-related price increases and inflationary forces from that, and you're likely going to see an even bigger than expected uptick, I think, in the cost of living. Without a wider pause in the trade war with China, the damage will soon be irreversible for U.S. businesses, according to a retail expert, including furniture, toys, apparel, footwear, and sports equipment. And it's really, I shouldn't even put up quotations. I mean, you've got to realize that we don't manufacture much at all still here in the U.S., and that's going to be another factor, folks, in the cost of living. Can the average consumer that's already loaded up on record levels of debt, can the average consumer withstand higher prices and a higher cost of living, even a little bit, even a 1% uptick in inflation? It's still higher prices, bottom line. And that could be the straw that broke the camel's back. Will this year be the year where the implosion happens? Well, if you ask some people, it's already happened, right? Look at all the people that are newly homeless, all the record now evictions in many cities. And I just came up with a whole bunch of new articles today, record-setting evictions here. Let's jump into that. And just in the past few weeks, it came out. Knoxville housing crisis, record high eviction rates. That's Tennessee, of course. Eviction cases hit record again, displacing Central Floridians. So some pain down in Florida there. Texas housing bill needs to change the eviction process as Houston faces record high evictions. All right, again, just in the last few weeks, Travis County, also in Texas, sees eviction filings surge in 2024, record evictions. Record-breaking evictions around the Phoenix metro area. And it just goes on, folks. So, of course, it's not just limited to those cities, and it's not just going to stop at the city limits. This goes outward to many of the smaller cities and the other areas around the cities and suburbs and other cities there surrounding. And, maybe you can let me know down in the comments. Are you seeing an uptick in homelessness in your area here in California, Southern California? I'm noticing more tents popping up, and they're trying to erase the tents. They're trying to make it... Well, they have made it illegal to put tents in certain in certain areas. They made it illegal. So what they're trying to do is cover up the problem or mask the problem by saying, okay, you can't put the tents up in these places where a lot of people walk, a lot of high traffic areas, downtown areas, sidewalks where the tents are more noticeable. But now I'm seeing more under the overpasses in like wooded areas around the streams and places like that. Just different placement of tents, but I'm also seeing more tents, not just in different areas, but just more total when I look around here in Southern California and San Diego. All right, shift gears a little bit, folks, here. Layoffs continue, not just the cuts and all the agencies being cut, but also now tariff-induced layoffs are really starting to tick up here. Starting to tick up. Mack Trucks announced layoffs at the Lehigh plant, and they blame tariffs. And so if trucking companies and trucking manufacturers, in this case Mack Trucks, laying off people, that should tell you a couple things. One, yeah, the tariffs is what they're blaming, but two, that should also indicate a more significant and a broader economic slowdown when you see something like that in the trucking industry here. Also, another announcement here, Volvo. I knew it was a vehicle that started with a V. Volvo Group prepares for 800 layoffs across 3 U.S. sites amid tariff challenges. So we have more and more companies now citing specifically tariffs as the reason for the layoffs. And also what we're seeing in the automotive manufacturing industry is something else with the new administration that's kind of upended a lot of things. That's EV vehicle production. We're seeing a lot of cuts in the EV production and those divisions of different companies because of the new basically focus on oil and fossil fuel energy versus the big push for the EVs and electric vehicles like we saw over the past 3 to 4 years especially. So it's another thing on top of the tariffs. A lot of different things are being kind of disrupted as far as the system of things and where the priorities are amongst these manufacturers. Now, I think 2 or 3 videos ago, we talked about how car prices were ticking back up. We're talking about used vehicle prices and what we're seeing at auctions, the Manheim Used Vehicle Index, for example. And a few people down in the comments said, well, I saw a video from this car expert that said prices are dropping. Well, it depends on what kind of time frame you're talking about. Let's just pull up a chart here out of Cox Automotive here, which brings us the Manheim Used Vehicle Index. And the chart really is going to tell us what's really happening here, folks. So take a look here. If you compare it to the peak where auto prices were at record highs there, late 2021, early 2022, yes, prices are down. But if you just look over the past 6 months, right, look at this chart right here. Ever since January of this year, actually going back to the fall of last year, prices are up actually pretty significantly. Right, if you're watching the video, let me just zoom in here. Right, since October, November here, here's January, prices up significantly in the past 6 months. So when I say prices are going up, I don't mean up above all time. I'm not saying all-time highs, and I didn't use the word all-time highs, but some people, I guess, got confused thinking I said all-time highs. No, prices are up over the past 6 months, and that, to me, that's very concerning because with the unaffordability, with the defaults rising in auto loans and other types of loans, credit card, everything rising, defaults, delinquencies, both, you would think prices would be dropping. But instead, over the past 6 months, prices are actually up. And actually, if you even go back 1 year ago, prices are even up slightly year over year. And don't take my word for it. Look at this here. It gives us year over year price changes for different priced vehicles as of mid-April. So this is very current. This is very up to date. Bring it up here so y'all can see it. All right. So I'm not just making up stuff. I'm not just guessing. I try to research all the information that I bring you. And for every video I put out, for every 20-minute video, I probably do between an hour and a half of 2 hours of research, right? So I really appreciate your support because it does take time to collect recent data, right? I'm not just guessing or saying what was in the news 6 months ago. This is all new, current news, every report. Now, to some of you, it may sound repetitive because a lot of the trends that have been in place for years are continuing, like inflation. It keeps on getting worse. Prices keep going higher. So, of course, we're going to report things are worsening as they worsen. But in total, year over year, vehicles here, total, all different types of vehicles, up 4.3% year over year. The only class of vehicles that have dropped year over year is compact cars, and they dropped in price less than 1%. Everything else, luxury vehicles up 4.7%, SUVs up 5.1%. So pretty much the trend is going up now for vehicles. Could it change? Sure, and we'll be on top of it for you. But over the past year, prices are up, folks. So if someone's telling you prices are crashing, maybe they're just trying to get clicks. I don't know what they're looking at. I guess you could say since the peak, prices have dropped. I wouldn't call it a crash, but prices have dropped some from the peak. But we're headed upward again, folks, and that should be concerning to anyone already concerned about the cost of living. And the second biggest investment that people make or purchase, if you want to call it that, would be automobiles. Of course, house and home being number one, the biggest investment or purchase that people make. All right, and back to the topic of the cost of living here. Strollers is going to be another big thing. When we looked into it, strollers are hardly at all produced or manufactured here on U.S. soil. Strollers and other baby products will get more expensive and harder to find with tariffs. And when we look into this here out of the AP, what do we find out here as far as the percentage? Well, it lays it out right here. An estimated 90%, folks, 90% of core baby care products and parts that go into making these items, from bottles to diapers to strollers, etc., car seats, are made in Asia. That's according to Juvenile Products Manufacturers Association, a U.S. trade group. The vast majority come from China, folks. So there you go. New parents are going to have a very difficult time in this tariff-induced inflation environment where inflation and the cost of living was already causing a lot of pain for people with 70% plus living paycheck to paycheck. It's about to get a lot worse. 2025 is going to be a doozy, folks. And I'm not saying the stock market's going to crash. People say, oh, the market didn't crash and I predicted a crash. No, the stock market, folks, if you haven't realized this, the stock market is not the economy. Again, the stock market is owned, majority owned by the top 10%. They own about 90% of stocks, right? So you got to get this concept of the economy crashing has to do with the stock market. Oh, the top 10% own the stock market. They can keep the stock market propped up while 70+% of the population is under severe financial distress. There's a complete disconnect in this, folks. And back to the stock market for a second here, before we move on to some other news. The stock market, the people holding the bag in the stock market were your average people just sitting their cash idly in their 401ks. So when the big money sold off, the elites, if you will, the top 10%, when they sold off their stocks, who was holding the bag? It's the 401k, the stock indexes held in 401k accounts, right? Because most people, when they're in a 401k, they're not sitting there in their retirement accounts picking individual stocks. It's usually groups of stocks, indexes, and different groups, different categories of stocks, small cap, large cap, etc. Funds, if you will. All right, people, but as I promised before, I'm going to bring you some good news in each report. So here we go. Let's get some good news up here. San Francisco Gentlemen's Club brings back long gone $5 buffet. There you go, if you're in the San Francisco area. And I hadn't heard the term Gentlemen's Club in a while. Actually, I don't know if I know what it is anymore. And they say they're laughing in the face of inflation. So is a Gentlemen's Club what it sounds like it is? In today's world of tariffs, this is out of WHNT, by the way, and high cost of living, it's hard to find a pro-consumer deal. But in a buffet in San Francisco's South of Market neighborhood, they're trying to fit that bill. The $5 lunch buffet at the Gold Club has returned. Would you trust any food at a Gentlemen's Club? Which has been praised in the past by outlets. After years of patiently waiting, we at Gold Club are thrilled to announce the return of our iconic $5 buffet, the establishment wrote. That's right, starting in April. All you can eat is put on the menu here, back on the map here at this location to satisfy your hunger and soul. It still doesn't tell us what a Gentlemen's Club is. Let me see if I can find out here. We'll see what Google IA has to say about this. AI, I'm dyslexic today. A Gentlemen's Club can refer to two distinct types of establishments: a traditional private social club or a nightclub or strip club. Just what I thought it was. Often associated with adult entertainment, folks. So if you get caught going to one of these clubs, maybe your significant other, maybe your spouse, maybe your fiance, whatnot, you could say, I went there for the buffet. I went there for the $5 buffet. I didn't know there was going to be naked people running around. I'm just trying to eat on a budget. I'm trying to save us money so we can do more romantic things together. There you go. That's how you get out of that. All right, so there you go, people. Let me know if the buffet is good, if you're in the San Francisco area or maybe visiting the area. And don't say I don't ever bring you good news. $5 buffet, Gentlemen's Club. That's good news. All right, folks, we've got a lot of insiders that went ahead and sold off before the big stock market downturn with the onset of these tariffs. So we see some insiders basically getting rid of their stock. And there's an article here saying that a lot of people sold before the tariff announcement. Well, if you've been watching this channel, we've been talking about staying out of the stock market and myself staying out of the stock market and being very cautious over 8 months ago when they first even before November, when they first started even announcing the idea of tariffs. I said, look out, because this is going to be very volatile and cause a lot of volatility in the stock market. And here we are. But yet some people waited until right before the tariff announcements to get out of the markets. If you've been on this channel, you know that I've been warning to look out for this here for probably close to a year now. Again, since they first started talking about it, I'd have to look back and see exactly when they first started talking about it. I think it was even on the campaign trail back in March. So we're talking over a year ago. They've been talking about tariffs, and now we're here, and people are looking at these people that sold, but I think it was pretty obvious even over a year ago when we first heard about the tariffs. And we even have out of Live Mint here, from Zuckerberg to Diamond, the top 10 executives that sold shares. And let's go down the list just real quick here, because I've got a couple other things I want to get into. Zuckerberg, but he's been doing that for a while, been selling off big shares. And I'll let you read into more of the numbers here just real quick, though. Safra Katz, Nikesh Arora would be 3, Max DeGrone 4, Chuck Davis 5, Director of Access Capital Holdings. We've got Stephen Cohen, President of Palantir Technologies. Jamie Dimon, we all know him, number 7. Eric Lefofsky, Chairman CEO of Tempest AI Incorporated. Ted Sarandos, and finally Travis Boersma. So there you have it, another example of the top 10% getting out before the downturn or the correction, if you will. And depends on where you're looking. It's been anywhere, though, from a 10 to a 20% correction, which most people would consider bear market territory for the markets. All right. More impacts here of the tariffs, folks. DHL suspending some parcel deliveries amongst the trade war. That's what's being announced here out of BBC and others. Is suspending deliveries, DHL, worth more than 800 billion because of a significant increase in red tape at customs following the introduction of the new tariffs. The delivery giant said it would temporarily stop shipments from companies in all countries to American consumers on Monday until further notice. So is that going to drive up the cost of deliveries? And is that going to contribute to driving up the cost of living even more? And it continues, previously packages worth up to $2,500 could enter the U.S. with minimal paperwork, but due to tighter customs checks that came into force alongside the tariffs earlier this month, the threshold has been lowered. DHL said the change has caused a surge in formal customs clearances, in which we're handling around the clock. All right, so what's going on here, folks? We were promised less red tape, less regulation, but we're seeing higher costs across the board, and it seems like more complications every time you look at it. All right, we have one of the Fed people out here actually saying, this is Goolsbee, warning against getting away from central bank independence. And why is this being discussed is because we have the administration right now calling for lower interest rates, saying they know better than the central bank. Maybe they do, maybe they don't, depending on what exactly you're looking at. But lower rates? No. I don't think anyone here agrees that we need lower rates. It may give a temporary boost to spending because people can have a little more easy money now with the lower rates if they lower rates. But overall, folks, higher prices are just going to do more damage than they're going to do good. It'll make the economy look good because people will be spending a little bit more with the lower rates. And just higher prices in general makes it look like the economy is doing good because people are spending more. And what do they usually point to? They say, oh, look at consumer spending. The economy is growing. People are spending more. So they use higher prices as a way to fool people into thinking the economy is actually growing. But it's growing. People's debt is what it's growing. And we talked in our last report about people age 50 plus still with student loan debt. We looked at it. It was at least 7 million people age 50 plus with student loan debt. If you didn't see our last report, please check that out. We dove into that a little more deeply into that report. And that just should be a kind of a warning sign that if you're paying for an education, but yet you're in your 50s and you haven't paid off the debt from the education, the student loans in this case, was the education worth what kind of career or what kind of income you got out of it. You know what I'm saying? So be very careful, folks, about just taking on debt without thinking about the long-term consequences. Finally, here's Southwest Airlines announces unprecedented change. We know that they no longer have the free bag onto the flight. They're going to be charging for that now. But also layoffs. So on top of raising their prices, they're still laying people off. So they're raising prices and still cutting some of their workforce here. This is unprecedented in our 53-year history. A change requires that we make difficult decisions in a pivotal moment that will transform Southwest Airlines into a leaner, faster, more agile organization, said Bob Jordan, president and chief executive officer. And what kind of layoffs are they talking about here? Let's see here. Over 1,700 employees. And this is more on the high-end corporate level. That represents about 15% of the corporate positions. So are these people being replaced by AI decision-making when it comes to the corporate level? You know, not facing the customer, not interacting with customers, mostly upper management, which usually involves some high-level decision-making type of things there, folks. So what is it? You let me know down in comments. What do you think about this report? What do you think about the tariff-induced layoffs? They seem to be increasing. And a big uptick in baby products. We already had seen a big drop-off in people starting families. And the population growth has slowed and even reversed if you look at the big picture. What does it mean, folks? Please let me know down in the comments what you think about this. Happy Easter to everyone. Thanks for being here. Appreciate you keeping this channel alive. Quick shout out to a couple people that gave me some super thanks and support here. Thank you to the following people for the support and super thanks. We've got Julian61983. Thank you very much. We've got H2O Tiger. Thank you very much for the super thanks and support. Of course, Mike S2974 and UFO Mark II. Thank you very much for the super thanks. Appreciate everybody. Thanks for being here. Please hit that subscribe button. Keep this channel alive. Appreciate it. Happy Easter, everybody. Bye for now. Peace.